Hi everyone, Craig from the Edge Property Buyers here again. Welcome to our update on the local property markets that we're focusing on. Currently we're spending a lot of time in Brisbane, we're spending a lot of time on the Sunshine Coast as well as north of Sydney and Newcastle region. Markets are still turning over there. I feel that Newcastle's coming to that peak of the market. Of the cycle in the market. We've had quite a fair bit of growth, and now we're seeing pricing starting to level out and activity starting to slow off a bit. And saying that, in the previous 12 months, some areas like Mayfield, with a median price that was around the sort of 580s, they had 20% growth last year or thereabouts. So now it's looking quite flat. And we're probably going to see that for a little while. And maybe some moderate growth just moving along, depending on what happens with the rest of the economy and obviously what happens with the election coming up. At this stage it's in May, but who knows, things move pretty quickly at the moment when it comes to federal politics. So I think there's still some opportunities there. Again, existing stock, there's a lot of new apartments that are coming through to settle, and I also, as we've seen up in Brisbane and we've seen in pockets of Sydney, like Olympic Park, Parramatta, where I'm worried that valuations are not going to stack up when it comes to settling if you bought, say, 12, 18 months ago. So just be very wary of buying off the plan stock at the moment in the current climate. As I said, especially in those CBD areas of Brisbane, where I still think they've got at least another 12 months before it bottoms out. We saw in the media recently where one of the developments, the valuations came in 25% under what people had paid. So that's pretty scary stuff, and you either got to give up your deposit or you've got to top up that loan, or that deposit amount to the higher, or to cover the gap between your loan and the actual valuation price to match up the LVR. So, we're looking at established properties. Sunshine Coast is still ticking around, or ticking over. And one of the recent reports, Noosa was one of the big highlights. We haven't spent a lot of time up there, but there's a lot of construction activity all around the Sunshine Coast, a lot of infrastructure going in, I think we've mentioned before, and a lot of opportunities there. You can get houses from sort of mid-fives and upwards on a good 600 square metre block and getting close to 4.5-5% rental return. So lots of opportunities there, and we're seeing good stock move reasonably quickly. So it's a good bonus. Vacancy rates are quite low. Around Brisbane, I've seen auctions where there's been absolutely no one's registered, and it's been a good quality property. And then the other week I was at an auction where there was probably 50 people there attending and multiple bidders, and it went, what I think, at least probably 50 to 70 over reserve. So it comes down to the quality of the property, I think. It is a bit of an up and down market as well. So we're seeing some properties sit on for 3 months, and that can be also the vendor's expectations and the pricing's wrong, or the marketing's wrong. So there are plenty of opportunities around in Brisbane, though, whether you're going from 12, 13 Ks out, where you're looking sort of early fives to mid fives for a house on a good sized block. Coming closer in the inner ring suburbs, you can still pick up a house for under $1 million. Within sort of 6 Ks of the city of good standard, and potentially getting a rental yield sort of high 3s, early 4s, potentially a little bit higher if you're lucky. So definitely some opportunities there. The townhouse market we're seeing, because we are looking for a client out there, he's looking for established townhouses. We are seeing some of the stock sitting on there for a while, and I think that's definitely copying an overflow effect from all the new oversupply. It's affecting all the established attached dwellings, so whether it's apartments or townhouse in those sort of areas. So either properties are tending to hang around a little bit on the market, or prices are having to come down to get them to move. So once again, that's a bit of a tough market. I would much prefer to be buying an established townhouse or apartment in somewhere like Brisbane than looking at anything new again. Again, if we were looking for it, we'd definitely recommend looking at smaller blocks with a higher land content, or townhouses. Once again, where you own a patch of that land, freehold ideally as well. So further out, we're seeing Ipswich is starting to move. I think it's turned the corner and starting to see some growth. You can anywhere from in the 2s to 3s. You can be looking at houses depending on which pocket you're looking at, and I think there's definitely some opportunity there. There's quite a huge amount of population growth that's predicted over the next few years, and there's a lot of infrastructure going in, and there's some new businesses moving in there. The freeway, the Springfield development. There's just quite a lot happening out there, and I think there's definitely some affordable opportunities out there. So I think that's a brief overview of the sort of markets where we're looking. If we can help you at all, don't hesitate to click the link below and book a time. More than happy to have a chat. It's obligation free. If we can help you out, we will. If we can't, we'll try and put you on the right track and put you in contact with someone that can help you. Okay, thanks a lot, guys, and happy investing. We'll speak to you soon. Bye.